market news story, and that, of course, is the TCS reaction that we had to the numbers. The IT season has started off. The mood is still very somber across the street. But, I mean, for what it's worth, the season has started off on an optimistic note. And that is because, it's not just about that top-line sluggishness. It's about the fact that margins expanded. And more importantly, the fact that the company sounded so optimistic in terms of the future growth prospects as well. We have Reema joining in to detail what all worked for TCS this time around.
Well, TCS earnings were just the start. Look at next week's earnings calendar. HCLTech, L&T Technology, Infosys, LTIMindtree, Wipro and Tech Mahindra, all the large cap IT companies report their numbers next week. Now today TCS's up move, and a very solid up move, was led by one, its recent underperformance, two, its valuations. Now Infy valuation was more than that of TCS, where historically TCS always commanded the premium, so investors said valuations are now attractive. The management noted the improvement in discretionary spends. Deal wins went up by 26%, and also more importantly, the management, which generally has been very shy of calling out even qualitatively or quantitatively any kind of guidance, said that FY26 is going to be better than FY25. And this is an important statement because the BSNL deal runs off, which is expected to contribute about, close to about 2.5–3% this year. So that has to be backfilled, and clearly the management is confident that there are other opportunities. But you know what? Barring a TCS and LTIMindtree, all the other large cap IT companies have given you a return of more than 30% in the last 1 year. So after this kind of an outperformance and today's up move, what is it that the street will watch very closely? Of course, you'll watch the commentary, etc. But if there is a guidance upgrade by Infy and HCLTech, so currently the guidance which is given by both the companies is fairly large. It's a wide range. So for HCLTech is 3.5% to 5%. For Infy also is 3.75% to 4.5%. So if the lower end of the guidance is raised, it's unlikely to excite the street. But if the upper end is raised, which means for Infy, if they talk about at least a 5% kind of a top line growth at the upper end, HCLTech about 5.5% on an organic basis, then the street would be very excited. Also note that today the large cap IT stocks have led the rally. The gains in the mid cap IT stocks, whether it's Persistent, Mphasis, Coforge, pales in comparison, which just reminds you of the fact that mid cap IT has already seen a bigger run up. ER&D companies, so not just KPIT Tech, but all the ER&D companies are under pressure, whether it's KPIT, Cyient, Tata Tech. And this underperformance of the ER&D company comes on the back of a long streak of underperformance. The whole of last year, these companies gave you a negative return of about 10 to 30% at a time when the IT services companies rallied.
All right, Reema, thanks very much for that. Well,